Guys, everyone is freaking about the 5% fall the Bitcoin experienced yesterday, but no one is talking about this gem. And on this video, guys, I'm going to show you the kind of interesting accumulation zone which is unfolding on the Polygon network, which goes by the name Matic US dollar, guys. Basically, the thing which is happening with this asset class is very simple to understand. Just like we all know, guys, the crypto winter was something which was very evident, right? Like we all saw it coming. There was a huge inflow of order, and obviously the market just shot up like crazy. And whenever that kind of price stretching occurs, you need to understand that the price has to correct itself in the due course, or else it is going to be one big, ugly, bearish run. But bears are not something you need to fear out, guys, because obviously, if you stick with the right class, bearish trend are common, and what it allows you to do is pick up the underlying asset at a much better price, and that is all what this opportunity is all about. So, let me show you the exact kind of confidence we are having with Matic, and by the time you're done with this video, guys, I'm pretty sure that you will be blown away because that is the kind of obvious parameters we are going to be touching. So let us get right into it. Guys, from the previous highs of around $2.80, the price has crashed by over 30%, and at the time of making this video, it is trading for around $2.11. So no questions here, guys. The bears are in control, and obviously this move was somewhat very predictable, right? Like from the previous highs, you can see that the price was getting stretched aggressively, and what it saw is just an healthy correction. But more importantly, you need to understand that Matic is just having a tough time when it comes to finding a reliable or rock solid support zone. So what is happening is that there is no zone in the near future when the institutions can step in and start collecting the order flows. Like the market is so crazily overblown, it hasn't reached the optimum point yet for the big whales to step in, and that is why Matic is just free falling for few days straight right now. And even now, guys, if you're just wondering, know that it is in no man's land. Like, of course, if you are someone who is going to dollar cost average your entry into it, then it is worth getting into, but you shouldn't place all your money in this asset right now because there is still plenty of room for this asset class to go down. First and foremost, guys, the exact time frame you need in order to see the entire thing is the 4-hour time frame. And once we do that, let me just go over to that time frame. On the 4-hour chart, guys, we can see that the price has broken below the 200-day moving average, which was in this region, and it has done it quite effortlessly, guys, because that is how the entire order book was queued. And if you notice the way the price is resting at this zone, do not be under the impression that we are in another bearish trend. Instead, what the price is potentially looking for is a resting zone wherein it can consolidate for quite some time before it gets enough fuel to break towards the previous all-time highs. So this is one potential support zone, and from there onwards, guys, the rock solid support or the accumulation zone is around the $1.50 mark, and that is literally a long way away. So that is why I said right now Matic is not the kind of thing you need to get involved. And one more thing, guys, on the 4-hour time frame, this is where the last support zone was, right? Like this is where the price dipped below the 200-day moving average and held it. Like you can see, even the candle wick supported this zone, which means unlike most regions, this is a very reliable one because it acts like a psychological level as well. Moreover, this is the position where the bulls are aggressively defending, and that makes it very reliable. One more confluence is that, guys, if you switch over to the daily time frame after plotting the zones, you can see that the rock solid support is near the 200-day moving average. And if you are someone who is invested in crypto for a long period of time, then I'm pretty sure you know the power of 200-day moving average on a good coin, especially on the daily time frame, right? Like if you've got any doubts, click away from this video and go and watch the stock to flow model on Bitcoin. Like that is the ultimate proof that if you invest into good projects, that is the best time to buy and hodl the pair, because the jumps from 200-day moving average is always going to be high. And just look at the history, guys. Every single time the price touched 200-day moving average, it has got crazy returns, and that trend is not likely to go away anytime soon. So just to rephrase and go take a step back a bit and explain as to why the token is in a no man's land, guys. Basically, Matic hasn't got much to do on the fundamental side, which means whatever happens is most likely due to the technical stuff only. And on the 4 hour, since it has broken the 200-day moving average and is supported by momentum, it still has to consolidate for a bit and then move on. So from the current zone, it is way too narrow, guys. And whenever you try to pinpoint the interest, take my word for it, it rarely works, which is why I said start dollar cost averaging from $2 and wait all the way towards 1.5. And if there is any price dip above this region, then it's an hands down buy only, because that would be like 50% crash from the all time highs, and it is a no brainer to pick this asset class at that price. And once the accumulation phase do gets over anywhere between 2 to $1.60 mark, the next wave is obviously going to be very huge. And conservatively speaking, guys, I would put a target of around $2.6 to $2.7, which essentially means we are going to rate the all-time highs in the near future, and the only thing left for us to figure out is where the trend that is existing right now is going to bottom. So as long as you're dollar cost averaging, we are talking potential returns conservatively also of about 30-35% without any leverage. And given how the price has acted every single time on the daily time frame on the 200-day moving average, that is much likely to be the scenario on the long term horizon. So mark the levels out on your charts, guys, and let data do all the talking. And before we wrap today's video, I just want to say that, guys, obviously this con hasn't got much love from the media, right? But here's the essence. When something just goes out of the media attention and is retracting back, it just means that the overall trend hasn't necessarily shifted into the bears, because obviously you can see the 50 is above the 100 and the 100-day moving average is above the 200-day moving average, which means the bulls are in complete control. Investors are holding big time. Blockchain data also dictates the same. So it is just a temporary noise we are dealing with, and even though that is boring in nature, that is where the most money is made. So mark out the levels, let the price come to you, and at the end of the day, let data do all the talking. So that basically pretty much sums up Polygon slash Matic. And as usual, guys, if you have got any doubts or questions, feel free to comment it down below. Subscribe to our channel for all the latest updates. See you on the next one.